Taking advantage or being taken advantage of? That's the true question. That's the true thing that needs to be focused on. A little bit of background first. We had a stock out there, and by the time this goes live, this will kind of be old news. But as of right now, Qualcomm made a crazy move. The thing went all the way up there. They had some news with Apple, and it sent the stock roaring. There's no doubt about it. And then I posted something out on my social media where I traded it. Did pretty well with it. What was it? I think 5 trades, and then I made 5 separate trades and 5 profits on them. So it's just like, hey, you know what? When you have a strategy that works, when you have something that you feel comfortable with, and then I ended it, the power of charts, because I'm a technical trader. I like to use technical charts. And that's kind of the backdrop of things. And then I had this little exchange on Facebook, but it actually goes to show something where, and I don't know if this person was trying to start a philosophical debate, or I don't know exactly what they were trying to prove. Maybe they're just trying to be funny. I don't know exactly what was going on, but regardless, whatever their intent was, it does create a pretty interesting talking point about taken advantage of or being taken advantage of. So let's first get to this interaction though. So Daryl says, is it really? Wasn't the pop from Apple settlement? However, a profit is a profit? And I come back, is what? Because I was kind of confused at this point. And then he points out my post, which said my trading journey today. That's what it was. So I posted an image of all the trades I had made with Qualcomm. So he says my trading journey today with Qualcomm, 5 trades and 5 profits. And then as you see there, he highlights the power of technical analysis. So in other words, Clay, are you sure your profits came from technical analysis, the power of charts, the tool of charts, or did those profits just come from the fact that Qualcomm went roaring upwards due to the Apple news? No, it definitely came from the power of technical analysis. Now, I realize what created the move was not technical analysis, was not charts. I realize what created the move was, the Apple news with Qualcomm. That's what created the move. But the question becomes, in traders, is not really what in terms of, what is creating the move? I don't know. I mean, fill in the blank of what creates some sort of move. Yeah, but that doesn't mean you're going to make money because something has created a move. What do I mean by that? Well, I can guarantee you there are some people out there, and in fact, I'll put the link below, but a while ago, there's a community member, and I did a big video on it that's actually definitely a must watch, but they definitely did not make money on Qualcomm because of this big move and the big news. They lost money on it. So my point is, there is a big move, but to just assume that, somebody that got profits on it, well, that's just because of the big move. No, I mean, who didn't get big moves on it? If something goes up like this, well, the shorts, I mean, if you shorted there, especially if you were down around here and didn't use a stop loss, you got absolutely roasted. But even if you did use a stop loss, you were still taking losses on the way up, even if they were small. So the profits aren't coming from the move itself. The profits are coming from how are you taking advantage of the move? What are you using to look at the move and say, all right, Qualcomm is definitely moving, but how am I going to profit from the move? Now, of course, it went up, and you could, you just bought, and that's all you had to do because it was going up. Yes, we're all saying that in hindsight. But if this thing would have done something like this, where it would have went up and then down, Daryl would have probably been saying, well, why didn't you buy, or why didn't you short? So I mean, and to be fair to Daryl, I don't know what his angle was. I don't know if he is trying to, I don't know if he doesn't understand. I don't know if he's just trying to be funny. I don't know if he's like one of these philosophers. What am I saying? Philosophers. I just blew out people's eardrums. Philosophers. Maybe Daryl thinks he's a philosopher, and we're not going to edit that out because it's just whatever. But maybe he thinks he's a philosopher, but like I said, the idea here is, at the end of the day, who really cares about what? What is not making anybody money? Because what can also be causing people to lose money? It's not just because the stock goes way up or way down. The only reason you made money was because it went down and all you had to do was short. Yeah, but do you see how simple? Do you see how oversimplified that whole premise is? If you don't, then you really need to stop and think about it, because that really has nothing to do with it. Everything comes down to how are you going to take advantage of a move? And because in many cases, moves take advantage of people. And that's why, and honestly, the most times moves are taking advantage of people, hence the 90% failure rate of traders. So I mean, in all actuality, the tool you use to either take advantage or maybe avoid getting taken advantage of has a whole lot to do with it. It has nothing to do with the news or anything like that. So keep that in mind. And in case maybe you're kind of getting too wrapped up with, well, what is it moving? Or what's moving and why? Okay, why? Okay, well, is it? And who cares about the headlines? Just focus on the fact that it is moving. Use a tool to either gauge whether or not you want to take advantage of it, how it's best to take advantage of it. Maybe the best way to take advantage of it is just to avoid it totally, but that's still a valid way to approach it. But there's much more to it than just simply looking at a headline and saying, no, the only reason money was made because it did, fill in the blank of whatever direction it ultimately went, which again, you are saying with total hindsight in your favor. So just keep these principles in mind. First off, thanks so much for watching the entire video. Real quick, before you go, I want to invite you to a live webinar, web class, training, workshop, online event, whatever you want to call it, but it will be me live revealing to you what I've discovered that has allowed me to transform myself from being an employee to being my own boss, including how I had only one losing day out of 73 days in total. I'm going to cover 3 keys that have helped me unlock profitable consistency within the markets. The first key is super weird, but in a productive type of way. The second key is super awesome because it quite literally is wired into our DNA as humans, making it very easy to use. But in a cruel way, this becomes a pitfall for many traders. I'll explain it all though, including how to avoid the pitfall that it creates for some. And yeah, the third key, when you hear it, sounds way too good to be true, but it's not, and I'll show you how it all works. Then at the end, I open it up for a question and answer session that is, again, totally live. Even if you can't make the live session, please still sign up as it will be recorded, and you can go back and watch the replay that I will send you. Click the image on the screen or click the link down in the description box so you can get the date and time and claim your spot, which I should note is limited due to the fact that this truly is a live event. If you have any questions, let me know. If not, I'll be seeing you soon.